Time is more valuable than money. You can get more money, but you cannot get more time. Jim Rohn. What do we see going on in the market today? We see stocks are mixed. Bonds and gold down. Bitcoin down almost 9%. We'll jump into that in just a minute. Let's start off as we always do with the S&P 500. Thank you again for Patreon supporters, book buyers. We appreciate you being with us. Appreciate all the new students. Again, 10 to 15 minutes a day. That is all we ask. But you have to be consistent each and every day to learn the nuances of how these ETFs move. And yes, you can use what we teach on your favorite stocks and your favorite ETFs, but you have to make sure that they are actually trackable. There are some stocks and ETFs that are not. How do you learn what's chartable and what's not? You look for consistent weekly vertical crossovers and two-day recrosses that you can count on. We talk about those things in the book, and we talk about them here on the channel every day. Let's jump into the charts. What do we see happening this week with the S&P? As we move through Thursday into Friday, what do we see going on at the end of the day on Thursday? We see a doji for the week. Now, is the market topping off? Well, the charts are showing us right now that we have a lot of sideways motion tending down. That price percent oscillator is pulling away from the red signal line. Derivative oscillator losing some downward momentum, but still negative. Go to the 2-day. What do we see there? Well, we have seen now 6 days of down movement. Things just tracking along so nicely on that trend line. Price percent oscillator, like the weekly, pulling away from the red signal line. Derivative oscillator gaining downward momentum. Go to the half-day. Lots of down movement in the morning, bit of recovery in the afternoon. Again, the half-day chart is also quite negative, and we see the price percent oscillator negative also. So as we watch, perhaps we're having a topping in the overall market. Not going to say that totally yet. We just have a doji for the week, means lots of indecision, but after 2 weeks of the market trying to move up with that price percent oscillator staying negative and pulling away from the red signal line, there's a lot of negativity there in overall prices. In the S&P 500, those 500 big companies that make up the Standard & Poor 500. Let's go on to the Qs. What is that? That's the NASDAQ 100. The non-financial stocks, the tech stocks. What do we see happening with them? Well, when we look at them, we see the price percent oscillator heading down, derivative oscillator gaining downward momentum, red spinning top after a green spinning top prior week, after 3 weeks of strong down movement. So again, as we watch, we look at the 2-day chart. What do we see going on there? Well, we are going to try to redraw this candle maybe a little bit better if we can. Not candle, the trend line, forgive me. But we see on the 2-day chart, price percent oscillator putting away from the red signal line, derivative oscillator negative, still losing some downward momentum. We can see that sideways slide that has been happening. And as we move from the 2-day to the half-day, we see where that half-day chart rotated over, strongly going down on Wednesday, pursued Thursday morning. A little bit of a pull-up in the afternoon, but price percent oscillator and derivative oscillator nonetheless gaining downward momentum. So we'll continue to watch and see how things are moving. We see that price is still above that the weekly trend line, but we'll continue to watch and see just what happens as we move along. In particular, we're paying attention to the price percent oscillator on both that weekly and that 2-day chart. So the overall mood in both the S&P 500 and the NASDAQ 100 is down on our 2-day and on our weekly chart on both of those ETFs, representing a broad span of stocks in each of those stock indexes. Now, what's going on with 20-year bonds? We see 20-year bonds down for the day 0.79%. What do we see happening? Well, we can see the S&P, we can see the weekly chart moving into, let's get on the weekly chart. We can see the weekly chart moving into a sideways slide above that weekly trend line, just hanging there on it. Derivative oscillator still going down. Price percent oscillator losing some downward momentum. Go to the 2-day chart, and again, we look at that, and it is showing that it just barely, oh, wait a minute, it is negative, so it's just barely not crossing on that 2-day. Even though we've got 4 days of up movement, penetrated at one point on the wick on top, the weekly trend line, and has busted through the 2-day over the last 4 days. Not quite a crossover. So we'll continue to watch bonds, wait and see if indeed over the next 2 days, that'll be Friday and Monday, it crosses over and decidedly, definitely pulls us out of that 2-day recross trade we have been watching since when? Back on February the 3rd. Now, of course, plenty of you guys took profits all along the way in your practice trades, and absolutely no reason you need to be in it now. But technically, we'll continue to watch and monitor that. What do we see on the half day? Up in the morning, pulling back in the afternoon. So that is where we are. Derivative oscillator losing momentum. Price percent oscillator, again, had been heading up and started losing some momentum in the afternoon. Still positive, as is the derivative oscillator. So that's where we are on bonds. Lastly, we go to gold. Gold down for the day, 0.36%. We see almost a doji there for the week after, again, another sideways sliding week last week. Derivative oscillator losing downward momentum, but that price percent oscillator still heading down. I keep waiting for gold to bottom good for us. We do see, of course, that we had a 2-day recross back on last Friday, but again, just sort of a sideways slide, but it is heading up. Derivative oscillator is trying slowly but surely to pull away from the red signal line on that 2-day. Doesn't mean we're in gold, but we're paying attention. We see what happened, though, after things were sort of laminated for a couple of days. We saw where gold rolled back over in the afternoon with the down movement. So again, waiting for gold, shake itself out, tell us which way it's going to continue moving, whether that's going to be down or if it's going to settle on the down movement that's already happened and move back up. And that, of course, will be signaled by a cross on the price percent oscillator over the red signal line on this weekly chart when that actually happens. Lastly, we go to Bitcoin, down for the day 8.54%. We look at Bitcoin for the week. We have an open box red spinning top. Means a slowdown in the up movement. Look at the price percent oscillator. Unless it's a big up day tomorrow, looks like we're going to be going into a weekly vertical crossover going down in Bitcoin. Been waiting for it for a while. It has given us that signal through the intra week for a couple of 3 weeks now, but it just never happened. Well, this week, unless things change significantly on Friday, looks like we will see that occur. Look at the 2-day where the price percent oscillator is pulling away from the red signal line. Derivative oscillator gaining downward momentum. Got a big red candle. In fact, it's the biggest we have seen in quite a while, going all the way back to maybe, going all the way back to January, late January. So as we look at the 2-day pulling away from the red signal line, again, blowing off a lot of energy Bitcoin is doing. Half-day chart, look at those chunks for the day on Thursday. Price percent oscillator spiking down, derivative oscillator just hammering down. That's where we are as we end the day on Thursday. So appreciate you being with us. If you have questions, problems, concerns, interests, don't hesitate to reach out to us. cw@chartingwealth.com. If you don't have our book, you need an autographed copy, we have them available, and we appreciate our Patreon supporters. God bless all my friends. All the best from the whole team at Charting Wealth World Headquarters.